All right. Good afternoon and welcome everyone. Thank you for joining us here for this great event. We're able to have a pre-run earlier and now we live for the world to see. But I'm with Operation Hope representing and some of my super friends, Talibah and Perkins with the SBA. A little bit about Operation Hope. We're a nonprofit organization that provides no-cost services to individuals, particularly small businesses in this case, to really help guide them through the process of applying for PPP and providing educational information related to the EIDL to really make sure that individuals are getting the correct information and understand exactly what they need to do to be able to navigate through some of the challenges that they may be presented to them. In addition to that, we partner with great organizations, as I said earlier, such as Talibah with TMB Financial and Tax Services and Perkins with the SBA. So I'm gonna get out of the way. I'm here to learn. I do want to encourage you to have your questions, have pen and paper ready to really dive in and get some information that I know and we know that's going to be beneficial to you and where you're trying to take your business. Thank you again.
I'm gonna go ahead and let y'all kick it off. And just like our other PPP webinars, we're going to really make this as informal as possible. I know that that some folks have been extremely excited of being able to be in the same Zoom room as someone with the SBA to be able to get that information directly from the SBA. And so I'm going to be in the background. This is all about Rod's presentation, y'all. So Rod, I'm gonna kick it back. Thank y'all for joining us.
All right, thank you. I just want to thank Operation Hope and TMB Tax for giving me the opportunity to have this conversation, have this dialogue, and to share information. One thing I want to note is, I have my laptop and I have a big monitor, and so I'm looking at the big monitor, so I'm kind of looking up. So if you see me looking up, that's what I'm doing. I'm looking at the monitor. I'll try to look directly into the camera every so often. So don't let that be a distraction to you. I know this has been some challenging times for small business owners and individuals as well with the COVID out there. I know my daughter, she just tested positive for COVID. I tested negative, and my wife tested negative, and my son hadn't been tested yet. But I think it's a mild case, so she's home, she's isolated, so she's doing okay. What I want to talk about, I know it's a lot of information and we have a limited amount of time, so I want to get to the heart of the matter, but there are some key components that I want to briefly just kind of mention to you so you can be aware of these items out there. And some of these programs have not been implemented yet by SBA. And so some of the slides, I've pulled information directly from the stimulus bill. And so as I mentioned earlier, the way it works is the president signs the bill, and then it goes to SBA and Treasury. Then SBA and Treasury would take extracts from the bill and turn it into the program. And so some of the information that's in the bill may not necessarily be implemented as far as SBA's program is concerned. So I want to point that out, and I identify those items where SBA has not provided guidance on yet. But the first item, additional eligible expenses. So in addition to the payroll expense and utilities expense and interest on mortgages, we allowed some additional expenses, and we'll talk about those. But it's still, 60% payroll and 40% other covered expenses. But we do have some additional expenses. The simplified forgiveness, I know that the lenders and the business owners were looking for a simplified process to apply for forgiveness. And, that's been anticipated for a long time, so it's finally here. SBA has developed a one-page application for forgiveness where essentially the business owner will complete that one-page document. They will submit that to the lender, and the lender in turn will upload that information to the forgiveness portal, SBA forgiveness portal. and SBA would basically pay the loan off. So that's very simple process. And I know Talibah mentioned, we want to make this as informal as possible, and I agree with that. So if there's any questions, or if Talibah wants to interrupt me at any time to ask a question, then feel free to do so, because we're all in this together. We're a team. And so, we have to be informal and have to be open to one another. The PPP first draw loan and the second draw loan, essentially the first draw loan is for those who did not receive a PPP loan on last year. So you're eligible to apply for a first draw loan. And the guidelines are essentially the same as they were last year. Now, there's a difference on the second draw loan where, you're eligible to apply for a second draw loan if you receive a first loan or first draw PPP loan. And I know this is kind of confusing because, you get your original PPP, and I'm going to call it the original PPP loan, the PPP loan that you got last year. So you're eligible to apply for a second draw loan, but there's certain criteria that must be met to be eligible to apply for that second draw loan. And we'll talk about that in just a minute. One thing that's really important to me, this SBA Guaranteed Loan Debt Relief Program, which we had that program last year. It was, Section 1112 of the CARES Act, where SBA would make 6 monthly payments on existing SBA 7A, 504, and microloans on basically SBA guaranteed loans. That program has been extended, and it's under the new stimulus bill. And in addition to paying, 6 monthly payments on existing SBA guaranteed loans, we would pay, make the first 6 payments on new SBA guaranteed loans. So that means that, if you don't have an existing SBA loan, this creates the opportunity for you to refinance, your non-SBA loan into an SBA loan, and SBA will make the first 6 payments on your behalf. And this is important because, there are a lot of benefits to it. In addition to SBA making those 6 payments, you're refinancing debt, and our terms are a little more liberal than the bank's terms. You're going to have a longer term, a longer repayment period, and you're going to have a lower interest rate, which translates to a lower monthly payment. So in addition to SBA making the first 6 payments, you're going to have a lower monthly payment. And to add further, we granted the banks, the lenders, the authority to defer payments, up to 12 months. And so originally it was, they had the authority to defer payments up to 6 months. So under the new stimulus bill, they can go up to 12 months. So technically, you can go 18 months without making a payment, and that would be significant cash flow savings. So that's why that program is important to me. The targeted EIDL and the emergency EIDL, the targeted EIDL advance, we allocated, I think roughly $20 billion for the targeted EIDL, and it's targeted to low-income communities and those that experience a 30% decrease in gross receipts or gross sales or gross revenues, and those that have less than 300 employees. And we're also targeting those that, and I don't know if everyone remember the history behind the EIDL. Last year when it first started, it was promoted as an EIDL grant for $10,000, grant that did not have to be repaid. And then it evolved into an EIDL grant of $1,000 per employee, which still didn't have to be repaid. And then it finally evolved to its final state. It became an EIDL advance, which it became a loan that had to be repaid. So there was a lot of confusion going on around that. And so SBA has reversed itself, and the EIDL grant, it's truly a grant. It does not have to be repaid. And anyone that received an EIDL grant on last year, we're making you whole if you receive less than $10,000. And so the grant amount is a flat $10,000 per business owner. So if you received on last year, let's say you apply for EIDL grant and you receive $1,000 per employee. You had 3 employees, so you received $3,000. So SBA is looking to make you whole. So we're going to cut your check for $7,000. So we're targeting those that received an EIDL grant on last year that received less than $10,000. And so we're going to cut a check for the difference between $10,000 and what you received. And we're also targeting those that were, in line, those who submitted their applications for the EIDL grant and the money ran out. And so we're going to reach out to you as well. And we're going to communicate to the business owners that are eligible to get the difference, between the $10,000 and what they received last year. And for those who were, waiting in line when the money ran out, you're going to get a flat $10,000. So expect some communication from SBA. The emergency EIDL advance, we allocating, and I think it's maybe $20 billion, so that the emergency EIDL advance is open to everyone. Now they will check, your credit. And so I think it's driven based on Beacon score. The resolution of tax issues related to forgiveness and this relates to the PPP loan, the forgiveness part of the PPP loan. Ordinarily, any forgiveness of debt is taxable. And so the IRS ruled that the forgiveness of the PPP loan would not be taxable. At the same time, the expenses that were paid by the PPP loan, those expenses were not deductible. The payroll expense, utilities expense, they were not deductible. Well, the new stimulus bill reversed the IRS ruling. And so now the forgiveness of debt is not taxable, but the expenses are deductible. Now, I'll be honest with you, I thought it was fair that the forgiveness of debt was not taxable and the expenses were not deductible. I thought that was fair. And so this new ruling, it benefits small business owners because you don't have that tax liability, but you can deduct the expenses at the same time. We have a few new organizations that are able to apply for a PPP loan, the 501c6, which is primarily Chamber of Commerce. They're eligible to apply for a PPP loan, and the broadcast news organizations are eligible as well. The shuttered venue operators grant, which I call that the, those operating in the arts industry. And I think it probably encompasses more than just arts, but we've allocated $15 billion to those that are operating in the arts industry. And it's purely a grant. Now we're communicating that you can't receive, if you're a shuttered venue, you can't receive a PPP loan and a grant. A PPP loan, and a grant at the same time. So it's either or. The additional eligible expense. Yeah.
Right. I just want to, for those folks who are joining us on Facebook, I see a couple of you guys on there. Please feel free to put your questions in the comments, and Damian and I are watching those. We also have a few questions in the Q&A box here on Zoom. Martin, I do see your question about the EIDL grant. What Mr. Perkins just went over is really the agenda of what we're going to be talking about. And we do have some slides dedicated specifically to the EIDL grants, because he dropped a few nuggets that's different this year on EIDL grants that I definitely am going to be pulling out and making sure that everybody caught that. But Martin, I just wanted to let you know that we are going to go over that specifically as it relates to the EIDL grants. We also, again, those who are on Facebook and also on Zoom, if you are applying for a loan, in the process of applying for a loan, please let us know. Rod is going to be going over a little bit of the PPP application. So we have a couple of slides on that. But I know a lot of you guys want to know about the EIDL grant. Okay, so he is going to share how that is going to work, because it is very different this year. Okay, so Rod, I'm going to turn it back over to you. I just wanted to acknowledge that we are going to be covering for Martin. We are going to cover that question. And then if you are on Facebook, put your questions in the comments and we'll grab those, and also share to your timeline so more folks can be aware of this information. Okay, Rod, go ahead. Sorry about that.
All right, thank you. And I advanced a couple slides. I want to get to the meat of what we're, the information I think that's relevant to you. And so this slide relates to the second draw loan. And so I want to mention the guidelines related to being eligible for a second draw loan. And of course, it comes with 100% guarantee, and that's any unforgiven portion of the PPP loan. It comes with 100% SBA guarantee. And now the only thing I don't really like is it's a short time frame to apply for the PPP loan. We got until March the 31st, and you know, SBA doesn't want me to speculate, but I don't know if SBA is in the room, but I'm gonna go ahead and speculate. You know, my feeling is, you know, that date will be extended, and my feeling is that we're gonna have, you know, plenty of money left on the table. And I will say this, you know, we started the program last week, not this week, but last week, and we opened the program to on Monday and Tuesday to minority banks and, you know, certified development companies and micro lenders and CDFIs. So we allowed them to originate PPP loans, first draw PPP loans, you know, Monday and Tuesday last week. And then we opened it up to second draw loans on Wednesday, you know, for that same group. And then Thursday, we opened it up to, you know, those financial institutions that had $1 billion or less in total assets. And so the big banks, you know, really didn't start until Tuesday of this week. But SBA has reported that during week one, you know, we originated, or the lenders originated 60,000 PPP loans. And they reported, now, I'm trying to wrap my finger around this one. They reported that over 3,000 lenders participated. And so I'm trying to understand, you know, between the minority banks and the certified development companies and the micro lenders and the CDFIs and lenders with, you know, $1 billion or less in total assets, that 3,000, that seems to be a large number. But anyway, that's what we're reporting, 60,000 PPP loans during week one, you know, 3,000 lenders. And so the entities that are eligible for the second draw loan, really any business concerned, these are the same entities that were, you know, available last year. And I think the only difference is the only new one is the housing co-op. And so you, as a business, you have to have, you know, less than 300 employees. And this bullet point here is saying that, you know, you could receive a second draw loan while you still have the first draw loan out there, but you have to have used or will use the full amount of the first loan. Okay, so now, you can't get a.
Now, Rod, I have a question about that. So particularly for those folks who got the PPP loan the first time, so definitely second draw. Now, do they have to submit the forgiveness application before they do the second draw? How would that work?
No, they do not have to submit the forgiveness application. And okay. In fact, and that's a very important question, because, you know, a lot of the lenders, I mentioned the streamlined forgiveness application process, you know, for loans of $150,000 or less. A lot of the lenders were waiting on that process, and that process just started yesterday. We just got guidelines on that yesterday. So wow, okay. A lot of the lenders, they were in a holding pattern in terms of accepting forgiveness applications from business owners.
Okay.
So you don't have to, you know, have gone through the forgiveness process in order to get a second draw loan.
That's a really good point. Really, yeah. Really good answer. Okay.
Yeah.
Hope y'all picking that up now.
And so the biggest thing with the guidelines for the second draw loan is this 25% reduction in gross receipts. You know, that's,
yes, it is.
That's a big one, you know, and so you're comparing, you know, gross receipts in 2020 to gross receipts in 2019. They come up with a 25% reduction in gross receipts. And gross receipts, you know, is all inclusive. You know,
Right.
I did a
Not net
webinar.
income.
Yeah, and I had a webinar, you know, where the question was asked, you know, and I appreciated that individual diversifying their source of revenue. And I encourage anybody to diversify your source of revenue, but they wanted to know if they could extract one source of their revenues to calculate that 25% reduction, because they were down that one source of revenue. They were down
like
more
a
than 25%.
service. Okay, well, I guess I get where they were going. So if you had multiple services, say
Yeah.
if you want to say, well, I wasn't able to do this particular service due to COVID, so there was a 25% reduction. That's actually a pretty creative way.
That's very creative, but it will not work.
Yeah.
So it's all inclusive.
Okay.
So all your sources, and that was a good question. That was
a good question.
And so, you know, in calculating the 25% reduction, now if you know, you show a 25% reduction based on your tax returns or your Schedule C, then, you know, you can provide your tax returns as evidence of the 25% reduction. I know we're going to talk a little bit about the required financials for documenting this 25% reduction. But if your gross receipts, you know, for all of 2019 compared to your gross receipts for all of 2020, and it results in a 25% reduction, and you can provide your financials, as opposed to you provide your tax returns or your Schedule C, as opposed to providing quarterly financial statements or quarterly documentation. And so you can see the example I have here, you know, and this is how to calculate that number, the first quarter. So I'm taking the first quarter of 2020, you know, minus the first quarter of 2019, divided by the first quarter of 2019. So what I'm saying is, if I had 25,000 in gross receipts in 2020, during the first quarter of 2020, minus, you know, I had 50,000 in gross receipts during the first quarter of 2019, divided by 50,000. So that's a 50% drop in gross receipts. So based on that, I would be eligible for the second draw loan. Now, somebody asked the question, well, is it just the first quarter? And so that prompted me, you know, on the right side of the screen, that prompted me to create this little chart, which shows, you know, the gross receipts. I'm right here. It shows the gross receipts for each quarter in 2020 and the gross receipts for each quarter in 2019. So if you look at quarter number one, you know, you can see the decrease from 250,000 to 200,000. And so that constitutes a 20% decrease in gross receipts. Now sorry about that. And so that constitutes a 20% decrease in gross receipts during quarter number one. So you would not be eligible because the threshold is 25%.
If you chose quarter one, right?
Say it again.
If you chose quarter one, or is that where
you would not be eligible? Yeah, okay. If you chose quarter number one, you're not eligible. And so I think the bottom dropped during quarter number two. So you can see I'm showing 260,000 in gross receipts of sales or revenues versus 120,000. That's in 2019 versus 120,000 in 2020. So that a 53.85% decrease. So you will be eligible based on quarter number two. So you can stop there, but you can see quarter number three, a 65% drop, and quarter number four, 56% drop. So you're comparing quarter to quarter. It has to be comparable quarters. You can't compare quarter number one in 2019 to quarter number two in 2020. So it has to be comparable quarters. Okay.
Okay, did everyone get that? Because so what I want to pull from this, particularly for those of us with this, you know, with the second draw, and Rod and I have talked offline, and I know that you guys probably want to ask it. So I'm just going to go ahead and say it, like add that commentary to this. So, you know, we know that those of us that are still open, we are open because we probably pivoted our services. right? We probably pivoted. If you're in the service industry, you added on something else. You added on a digital product. If you were a restaurant, you did curbside, you know, or if you had the ability to build out a drive-through. So you had to pivot your services in order to be able to stay open, right? But the response, unfortunately, is that you still have to show this reduction. And so you know, if there was like the ray of sunshine in this 25% reduction, is, as Rod just pointed out, is you can choose quarter to quarter, or you could choose the whole year, right, Rod? So
That's correct.
particularly for those of us that are seasonal, or just really any business, you know, that maybe in the first quarter you're strong versus the third quarter you're weak, whatever the case may be. What I want y'all to be, you know, taken from this is, you know, number one, you got to know your numbers and able to be able to do these calculations. But what I want you all to pick up is look at each of your quarters and compare the years. Quarter 1 through 4, 2020, quarter 1 through 4, 2019, and see if there is a quarter, again, comparable across the years, where you would reflect this percentage. So all is not lost. You're just going to have to make sure that you're looking at your numbers and choosing that comparable period. Now, Rod, that does lead me to a question for, say, a newer business. And I guess I really do have the answer, but I'm going to ask the question anyway, just because it's been asked to me. So, you know, what if that business actually started, say, in December 2019 or November 2019? What should they do?
Well, you can, you know, we got some guidelines, you know, for those who were not in business, say, you know, the first 2 quarters of 2019 or the first 3 quarters of 2019, and even that just started, you know, the first of 2020. And so you would, you know, if you started in November, December, you can really use the first quarter of 2020 and compare that to, and actually you can compare that to any of the remaining quarters. So you can compare, you know, quarter 1 to any of the remaining quarters. And so, you know, if you say you weren't in business in quarter 1 or quarter 2, then you would have to compare quarter 3 and quarter 4 of 2019 to quarter 3 and quarter 4 of 2020.
Okay.
So if you weren't in business, you know, the first 3 quarters, I mean, you can compare quarter 4 in 2019 to quarter 4 in 2020. And so if you started, say, late December, then we're allowing you to compare the first quarter of 2020 with any of the remaining 3 quarters.
Okay.
Yeah.
Within 2020. And
Within
so,
2020.
okay, Damian, got it. So Pam, and I know a couple of other folks were wanting to know, like, if we're going to do a, give you slides or whatever, we are going to give the recording. So just make sure that you we have your email address, okay? And we will send the recording of the video to you. All right, Rod, turn it back over.
Yeah, and you know, that makes me think about, you know, you talk about the required documentation. Now, for loans of $150,000 or less, then you're not really required to provide the documentation up front. And when I mean documentation, you know, this is evidence of that 25% reduction in gross receipts. Now, the evidence comes in the form of, you know, internal financial statements or tax returns or bank statements. Now, I'm trying to get, I sent the email up the chain, SBA, trying to get, you know, some more details on other required documentation. But as it stands right now, you know, bank statements, tax returns, and internal financial statements. And so, you know, I know a lot of Schedule C filers, sole proprietors, you know, you don't generate internal financial statement. You just do that Schedule C the first of the year. And so, you know, you can provide bank statements now. If you go to the bank every Friday and make that deposit consistently every Friday, And then that's documentation. So you're taking all your Fridays for the quarter and adding up your deposits, and that's going to give you your gross receipts. But I would encourage you to, you know, maybe invest in some software or get with Talibah, and so she can help you, you know, prepare some internally generated financial statements, because you need to know, you need to prepare some internal numbers, because that's your guide. That tells you how you're performing.
Right.
And so, you know, to get the quarterly statements, you need some guidance, and I encourage you to, you know, look into maybe some software, again with Talibah again, so she can show you how to generate those quarterly financial statements. Now, calculating the maximum loan amount, you're taking, you know, the average monthly payroll, which you're taking your payroll for the entire year, and you divide that by 12, and you multiply it by 2.5. And so you can do, you know, you can do 2020 or 2019. Now it says here, you know, 1 year period before the day which the loan is made. And I just say 2020 and 2019. You can do either or. So you want to calculate the numbers to see which one benefits you most. Okay. Now, if you're operating in NAICS Code 72, you know, accommodation and food services, then you get to, you know, we're allowing you to get a larger dollar amount. So you take your average monthly payroll, you know, times 3.5. And again, that's 2020 or 2019. And so the NAICS code, and NAICS stands for North American Industry Classification System. It's I think it's a 6-digit code that represents the industry that you're operating in. And we'll take a look at, you know, what all encompasses, you know, 72, the NAICS code 72. I think we got that on the next slide. And so you can see here, you know, 72 encompasses a lot. And I'm gonna try to go to the internet, Talibah. Let's see if I can see if this works for me.
Okay. And while you're bringing that up, I want to pull out 2 things there with those of us on the second draw, because I asked Rod this yesterday, and I know folks are asking. So when it comes to the calculation, like how you're determining the max loan amount. Now that max loan amount, right, is also in addition, you want to make sure that you have made sure you're eligible for that 20% reduction. So to me, your first step should be making sure that you have looked at your numbers to show whether or not you have that 25% reduction, right? And I know that some folks have even said, okay, well, let me see what I could possibly be eligible for before I go into all of this work, you know, to do my tax returns and so forth and so on. And that's totally your right. But again, in order, when you say, hey, can I get this, you know, the PPP loan and all these various things, really look at your numbers and see if you have somewhere that's showing that 25% reduction first, you know, before you get your hopes up and start saying, oh, well, according to this, my max loan can be blah. Because as you can see, you know, that 25%. Now, the other piece that Rod said, and I've been asked this before as well, and I know that I mean, I can say it versus Rod saying it. So he said that if your PPP request is less than $150,000, that it is not required for you to show this documentation up front. Now, that's what the SBA said. That's what Rod just said, right? However, I know that several financial institutions and even fintech like Lendistry, they're actually asking for that information up front, right? And so now you can see that you've heard it directly from the SBA that is not required to be submitted. However, some institutions are requiring that information up front. So you just want to, I'm all about strategy, right? So you just want to make sure that you effectively strategize not only where your business stands on eligibility, but who you apply to.
Yeah, and I echo that, you know, and I just stated what the guidelines say, SBA guidelines say, you know, it's not required you know, that you provide the evidence or the documentation on the front end, but you do have to provide a certification that you do meet that 25% revenue reduction.
Right.
Now, I would encourage you to, you know, provide the documentation on the front end. And my lenders, my bankers, they want to see the documentation on the front end, you know, as Talibah stated. So, you know, the NAICS code, you can go to the Census Bureau website. If you don't know your NAICS code, go to census.gov and do a search on the NAICS code. You'll get this page, and you can type in, if you know the prefix, you can type it in, or, you know, you can type in, you know, the industry itself, and it will give you the NAICS code. And so you do a search. And so you can see here, NAICS code 72 is, you know, and this is the industries that begin with 72. So you can see, you know, you got travel accommodations, you got, you know, hotels, bed and breakfast, you got RV parks and recreational camps, you got food services, caterers, you know, mobile food services, which are food trucks. And so you can see the list that began with 72. So I just wanted to point that out to you. And, you know, one other thing on this slide here, I want to point out, you know, SBA, you know, we pay, you know, the lender's a processing fee, you know, to process the PPP application and to service the loans. Now, I know there's been some issues with, you know, the business owners engaging, you know, accountants or attorneys to help them prepare a PPP application. This happened last year, and the accountant or the attorney, they were looking for the bank to pay them, you know, and SBA communicated, you know, we would, you know, pay the bank a fee, and out of that fee, the bank would pay, you know, a service provider that helped the small business owners. And, you know, come to find out that the banks refused to pay a lot of those accountants that work with the small business owners. And so I think they implemented some guidelines, you know, stating that unless there's a, you know, unofficial contract between the lender and the accountant or the service provider, then the lender is under no obligation to pay a fee. And so what we have here, I'm just pointing out the fees that SBA pays the bank. You know, for loans not more than $50,000, we're paying, you know, 50% of the outstanding amount or $2,500. So, you know, there's PPP loans, you know, of course, $1,000 or $500. So, you know, on a $1,000 PPP loan, we're not going to pay $2,500 a fee to a bank. We pay 50%. So we'll pay $500. And so for loans between $50,000 and $350,000, you know, we're paying the lenders 5%. You know, more than $350,000, we're paying the lender 3%. And so the terms on the second draw loan are essentially the same as the first draw loan, 100% guarantee, and that's on the unforgiveness portion. No collateral, no personal guarantees, you know, 1% interest rate, and, you know, 5-year maturity. Now, you know, the no personal guarantees portion, you know, I got a lot of calls last year, you know, business owners saying, well, the bank pulled my credit. They pulled my credit report. And so that really, it wasn't a requirement because there's no personal guarantees. If there's no personal guarantee, there's no credit reports to pull. But
I think for the PPP.
Say that again.
And this is for the PPP.
Yeah, it's for the PPP, and that's a good point because the EIDL loan, then we're pulling credit. We're doing some underwriting for the EIDL loan, but there's really no underwriting requirement for the PPP loan because there's no personal guarantee, so there's no pulling up personal credit reports. Now, however, some of the lenders, you know, and I reached out to the lenders after the business owners called me. I reached out to the lenders asking them, you know, why are you pulling personal credit reports? And, you know, for those customers that they did not have a relationship with, you know, they, you know, wanted to identify those customers because they're obligated under the customer identification program. They got to know their customers. And so, they extended PPP loans to non-bank customers. And so their way of identifying those customers, put their personal credit report, which that
That's
was
interesting.
fine. But, they can't use personal credit as a means to make the decision on a PPP loan.
Wow.
So, you kind of raise the eyebrow, say they'll put in personal credit. I mean, are they looking at that 500 beacon score and say, well, we're not going to do this loan, and they're not supposed to do that.
Right.
So that's the communication I got from the lenders, and considering all the fraud that's been involved, they may pull your personal credit, but they're not supposed to use that as the underwriting criteria. Okay.
That's very good information. So, Rod, we allotted for an hour, and everyone that's on here, particularly the folks in Zoom and as well as those watching us, we allotted for an hour for today. However, I also, just want to let you know that we're going to keep going, because there's some information, particularly the EIDL advanced stuff that Rod's going to go over that we're going to cover. Right. So I've blocked my schedule as well. So we're going to make sure we cover those things. So it's important, if you're watching this on Facebook, and then of course, those of you on Zoom, we already have your contact information, but please make sure that we have your email addresses so that if you have to hop off, we can give you that recording. And then if you have any questions, that we can get those answers over to you and funnel them up to Rod where we need to. But really, like I said, this is a major conversation, and Rod, really, I hope you realize how much of a treasure you really are in sharing this information with the business owners, because what I got from that was, you need to be hyper aware of what the real requirements are. When I look at this slide, I look at, okay, well, if SBA is only paying, the actual bank, the actual lender 5%, why am I going to pay, someone to help me prepare my application 10% of my loan? Right. So you want to, it's different nuggets that's coming from this that Rod isn't explicitly saying that I want to point out. And then, of course, as it relates to the whole credit piece, part of the SBA, there isn't a credit requirement for the PPP. However, if you're going to a different bank, if you're not with the bank that you normally are banking with, and they have opted to run your credit for a reason like that, for me as a consumer, I'm, like Rod said, I'm raising my eyebrow, right? And perhaps I'm going to take my business elsewhere. So, just be, and not just because, I may or may not have bad credit. It's just because the rules are the rules, and they should be applied across board. And we've talked about these things as it relates to unlocking access to capital, for Black and brown businesses. This type of stuff is important for you to know. Yeah, absolutely. That all of this stuff is supposed to be applicable across the board. So you're armed with this information, and me interpreting and remixing it the way that I see it, you know what I'm saying? Not to give Rod interpret anything like that, but these are the facts that's coming from SBA. And I really want you guys to be able to use this information, not only to access the funding for your business, but also just so you can strategize moving forward on on different things for your business, period. This goes beyond PPP and EIDL.
Yeah, absolutely. And one thing I want to emphasize is, you want to have a relationship with your banker. Now, I support branch managers. They wear a lot of hats, but you really want to have a relationship with a business banker or a commercial lender. And so that's where the relationship is important. That way you can call them at any time. And, and so I think that's what happened. Well, that's what's been communicated to have happened the last time. Those who had relationships with the banks are the ones that got the PPP money, because it's really a first come, first serve. And so, of course, we, this under the new stimulus bill, this second go around, we allowed the minority banks to give first run at the PPP loan. And I actually checked the system on yesterday. In Alabama, there were like 533 PPP loans made. And I want you to know that I am advocating on your behalf, with the lenders. I may not be in the public arena all the time. And I think I need to be. Some people saying you need to be more visible, man, and so, but I am behind the scenes advocating, working with the bankers, with the lenders, to get them to lend more money to underserved, communities and underserved individuals. But you want to have a relationship. And I got on the minority banks as well.
Yeah.
So let's move forward.
Hey, Rod, as we move forward, I was going to say thank you to everyone, and I'm going to get it over you, Talibah. I want to say I put my email address in the chat box because I do have to hop off. So I am going to go back and listen to this recording. So if you do have to leave, make sure if you didn't register via Eventbrite to email me, because we want to make sure you get that information so you can be informed properly. And I also had a question before I go, Rod, and it may tee you up to the next slide. I hope so. When we talk about pulling credit, and I know Talibah alluded to it a little earlier, where it's not required for the PPP, but from my understanding, if you can confirm that they will look at your credit score for the EIDL. Is that right? Okay.
That's correct. That's correct. For the EIDL loan. For the EIDL loan up to $2 million, 30-year term, 2.75, 3.75 interest rate. They do some underwriting. So they will pull your personal credit and they will check your Beacon score for the EIDL loan. That's correct.
And so, Rod, can you go over, thank you, Damian. That is a perfect segue. Can you also go over, I know yesterday you were talking about the difference between the targeted EIDL advance and the emergency EIDL advance. Can you go over that information for us?
Yeah.
Martin asked about that. Everybody's like, when can I, translation, when can these people get their $10,000? That's what they wanted. Everybody's like sitting there like, when it, on the, waiting on this website, like, when can I hit submit, right? So, I know that there is not a date out yet officially from the SBA, Martin, because I know Martin in particular has sent a couple of messages to me on the Facebook page like, look, when can I apply for this grant? When can I apply for this $10,000? We know how that was last year. So Ryan, I need for you to school us on how the $10,000 grant stuff. Please share this knowledge with us on the differences, y'all, because that's a segue on the differences that are going to be happening this year regarding those grants.
Yeah, I pulled up the slide for the targeted EIDL, and we've allocated, roughly $20 billion, and this program, the targeted EIDL, lasts through December 31st, 2021. Or until the funds are exhausted, So, I mentioned how the EIDL evolved on last year, and it evolved into like $1,000 per employee. Now it's just a flat $10,000 per entity. Okay. And so the guidelines, you're located in a low income community, and that's really any census tract that's showing a 20% or more poverty rate. And here's another important feature. You have to have experienced a 30% economic loss, and that's a reduction in gross receipts again. And it's comparing, 2 8-week periods. And again, we're comparing 2 8-week periods. And so from March the 2nd, 2020 through December 31st, 2021. So you're selecting an 8-week period during that time, and you comparing that to an 8-week period, and let's just say, during 2019, because it says immediately preceding March the 2nd, so that would give you January, February, but we'll say 2019. Okay. And so the example I have here, I'm taking a 8-week period, March the 2nd through May the 2nd. Let's say my gross receipts were 25,000. And I'm comparing that to a different 8-week period in 2019, March the 2nd, 2019 through May the 2nd, same, a comparable 8-week period. And so my gross receipts were 50,000. And so that represents a 50% drop in gross receipts. So that makes me eligible to apply for this targeted EIDL. Now, and then the business owners, businesses, should have less than 300 employees. Now, and I mentioned, last year, there were those that got, an EIDL advance, and some got less than $10,000. So we're looking to make the business owners whole. And so we're going to offer them the difference between the $10,000 and the amount that they received on last year. So if you receive.
But that's after they've qualified according to these things, though, right?
Yeah, that's important.
So you gotta put that in there. It's like, okay, so.
Well, wait a minute. No,
okay.
That's not.
Okay, clarify that for me. Well,
and I'll say this, SBA has not provided any guidance. So this is information that's coming directly from the stimulus bill. So
okay.
this is not in operations right now.
Okay.
And now you got me wondering, because we're saying that if you receive, now we talk about targeting. So I think it's saying we're targeting those in low income communities, 20% or more poverty rate, and those that experience a 30% economic loss. So those are the groups that we're targeting. Now, on the other side, those who received the grant last year, but it was less than $10,000, they're going to get a check for the difference between $10,000 and the amount they received on last year.
Okay.
So that's automatic. I think that's automatic.
But it's still that this round's guidelines here apply. So if I got $1,000 last year, or I'm sorry, when was it, Jesus? Yeah, last year. So if I got my $1,000 last year, okay, I didn't have to experience a 30% decline and all of that stuff last year. And I like the way like you're breaking it down, because we need to point this out. So this year, if you are wanting to do the EIDL advance, and please jump in if I'm not interpreting this the right way, if I want to then try to get the EIDL advance again, and I happen to also be under the targeted area, meaning my business is in a low income area. So you're saying that after I have identified I'm in a targeted area and I have experienced the 30% reduction, then I can be made whole in the $10,000. That's what you're saying, right?
Well, and see, I'm waiting on guidance to come from SBA, but my interpretation would be, it's targeted EIDL. So number one, we're targeting, and this is the priority, we're targeting those that received a grant last year, but did not receive $10,000.
Okay.
So we're going to make them whole.
Okay.
So that means that this census tract of 20%, 30% reduction is not applicable.
Oh, okay.
Okay. And so, because we're going to send out a letter to all of those that are eligible.
Okay.
Now, this is my interpretation. Now, we're still waiting.
This is why Perkins attorney.
Still waiting, so we're making those whole. Those people that received the grant last year, but it was less than $10,000, and so the flat amount is $10,000. So we're going to make them whole. And then for those, the second priority are those who submitted their application for EIDL grant, and we ran out of money. So we're going to target them. And we're going to send communication to them. Now, and you brought up some,
I'm
some good points.
I didn't mean to put you on the spot, but you know how I'm always thinking about different way, like, okay, because people are going to ask these questions, you know, and so we could definitely say, you know what, when the guidance comes out, we'll make sure that Rod gets it to me and I get it to you. Because I know that, you know, that people are going to be asked, well, okay, well, if I got it last year, do I have to, you know? So that's why I wanted to go over that. So we did the targeted EIDL advance, but you were saying also before, in the times we talked, there was the other piece. So what's the other piece of the EIDL advance?
Yeah, you mean the emergency?
Yes, the emergency. That's basically a continuation from the last one, right?
Yeah. And so, you know, this targeted EIDL, you know, so we're targeting, you know, those who received the grant, but it was less than $10,000. We're targeting those who applied for the grant and we ran out of money. And we're targeting those who are in this poverty census tract of 20% or more and suffered a 30% economic loss. That's my interpretation.
Okay.
And so I'll provide guidance as soon as I get the guidance to clear that up, because I mean, we're allocating $20 billion. Okay. And so, and there's a need for it. So I'm thinking, you know, we're just targeting these certain areas, you know, low income, 30% economic loss, you know, those who received the grant last year, but they didn't get to 10,000, those who were in line waiting, we ran out of money. So those are the targeted areas that we're looking at. Okay. And so the emergency EIDL would be everyone else. Okay. And so, you know, this is coming straight from the stimulus bill, and SBA has not provided guidance yet, but, you know, they're saying the approval based solely on credit score. Then it has, or, you know, they're going to determine other means of determining the applicant's ability to repay the loan. And you know, use information from the Treasury Department. So what that means is that, you know, under normal circumstances, under 7A loan, for example, you know, we require the bank to check what's called a CABRS report to see if there's been any delinquent federal debt or charged off federal debt. Okay. Now that wasn't a requirement last year when we first did the PPP loan, but SBA has identified in its system where a lot of the existing PPP loans, you know, there were some delinquent federal debt, there was some charged off debt, and those loans are on hold. As far as the forgiveness process, those loans are on hold. And so, you know, when you go to the lender today to apply for a PPP loan, a second draw or first draw PPP loan, you know, there's going to be a delay, and the lender submits the application to SBA. There's going to be a delay in SBA responding. Because last year when the lender submitted the application, the lender got an immediate approval. He got an immediate loan number. Well, today that's going to be a slight delay, maybe 24 hours, maybe a couple of days. And SBA is doing its due diligence because there's a lot of fraud. There was a lot of fraud that happened. So SBA now is looking to do its due diligence. And
I have a question because we have the CAPERS. Is it CAPERS?
CAPERS,
CAPERS report. Yeah. And I just had a really good question on Facebook, a couple of them. So because I told y'all that the EIDL stuff was definitely going to be a hot topic. So I want to talk about the whole credit thing again, because you have on here the emergency EIDL grants, the approval is based solely on credit score and then the other bullet points. To go back to the targeted EIDL advance, that's also going to be a credit check as well, right? Or no?
Well, you know, and again, you know, this information is coming directly from the stimulus bill, and there was under the targeted EIDL, there was no reference to credit. There was no reference to credit check.
Okay.
And then under the emergency EIDL grant, that was referenced to, approval based solely on credit score. And that's what it states. And those are the exact words that are reflected in the stimulus bill.
Okay.
Because ordinarily, the credit is checked when you're applying for an EIDL loan.
Okay.
And so I'm still unclear as to why we would check credit on an EIDL grant.
Okay.
Or assess the applicant's ability to repay. Now, this is something that, again, that's reflected in the stimulus bill, and SBA could take extracts from the bill and turn that into the program.
Okay.
So I'm not clear as to why, we would pull a credit score or assess ability to repay the loan on a grant.
For the grant, yeah.
Yeah. So
it's the federal government. You know how how having worked there for 15 years, and I know, how long have you been with the SBA?
12, 13 years.
Yeah. So it's, we know some things it just follows in the procedure. You know what I mean?
Yeah.
It's not, but it's just the way it is. Someone just brought over that language, and so now it's the way that it is with that. Okay, perfect. Thank you for clarifying.
So this bullet point will bring some, I think will bring some clarity on what we're talking about on the targeted EIDL. Because it says here, and I'll read it, it's the sense of Congress. This is coming directly from the stimulus bill.
Okay.
It's a Congress that borrowers of loans made under Section 7B2 of the Small Business Act in response to COVID-19 during the covered period should be made whole. So that goes.
Uh-oh. Am I frozen, y'all, or is it just Rod? Okay. So the other thing too that I want to say, as we see if Rod's going to be able to get back on, we are going to do another one of these. So when Rod and I were talking yesterday, I know that a lot of folks who are self-applying wanted to get kind of walk through the actual application. So how you fill out that application. So today was really sort of a preview or segue into us doing a more detailed more detailed technical session. And so save the date. We might try to get back on here next Friday so that we do the actual application and any sort of technical assistance on that piece. And I thank y'all so very much for hopping on with us today. Like I said earlier, and those of you who may have missed it, it's very, very, very important to me, as someone who is just committed to getting the real information out there. It's very important to me to have these type of webinars where you're able to get the information directly from the source. We know that there's anxiety about like how's this going to work. You're trying to keep your business open. Where can I get this money? All these other questions, right? And so because I'm getting these questions and because I'm a business owner, because I want to know what type of funding I'm going to be able to have for my business, this was important. This type of thing was important. So if you enjoyed today, again, there's something else that you want for us to cover. I'm going to bring on some financial partners, Sabre Finance, True Fund. We're going to be doing this stuff. I've even started a nonprofit, right? Because a lot of people are like, girl, how are you making money on this? If you're just giving out all this free information. My heart is giving this information so that you're able to effectively and efficiently run your business. Okay, so I've even started a nonprofit so that we can do this more often and you can get access to this information so that you can unlock the access to this funding that you need. And unlocking access also includes the information. This is public information, but sometimes you have to have someone to translate that information to be a federal regulation whisperer. That's what I'll call myself. Since I've worked with the federal government and again, can connect you guys with folks who can explain this. That's what I'm here to do. So make sure you like the page, follow the page, share this information, because this is the Get Bankable movement. This is the movement. This is what we need to be doing for the small business community. And I'm joining the ranks with all the others that are doing this and are committed to this. Okay. So I will see y'all. I sure will, Martin. I will see y'all next time. Okay.